Hey there everyone, Solana is absolutely exploding right now, but which altcoins are going to rule its ecosystem by 2026? Let's dive in and find out. We've spent the last week analyzing every single project, and we've narrowed it down to 4 that we think have the potential to dominate. This isn't just about quick gains, it's about finding the projects that will define the future of the Solana ecosystem. Solana's growth is mind-blowing, faster, cheaper, and attracting millions of users and developers. It's like the early days of the internet all over again, but for crypto. The projects we're about to show you are building the essential infrastructure on Solana. They're the Googles, the Amazons, the foundations of this new digital world. Getting in early on, these could be like buying Amazon stock in 1997. So in this video, I'm going to give you the 4 altcoins that my team and I believe will be the titans of the Solana ecosystem by 2026. We're going to break down what they do, why they're important, and their potential for growth. We're putting our research on the line here, so you are not going to want to miss this. Let's get into it. First up is Jupiter, the backbone of trading on Solana. If you've swapped tokens on Solana, you've probably used Jupiter without knowing it. It's not just another decentralized exchange, it's a DEX aggregator. Think of it like Google Flights for crypto trading. Instead of hoping for a good price on one exchange, Jupiter scans every DEX on Solana in seconds. It finds the best possible price for your trade, a complete game changer. Before Jupiter, you had to manually check different DEXs, which was a huge pain. Jupiter simplifies this, acting like a smart trading bot working for you 24/7. Jupiter handles a gigantic portion of all trading volume on Solana, billions of dollars. It's the go-to platform for millions of users. As Solana grows, Jupiter grows with it. Every new user and DEX on Solana strengthens Jupiter's system. The team behind Jupiter is relentless, constantly shipping new features. They started with swaps, and now offer limit orders, dollar-cost averaging tools, and a perpetuals trading platform. They're building a complete trading suite that could rival centralized exchanges like Binance. If Jupiter captures even a fraction of the global crypto trading market, the value of its token, JUP, could be astronomical. It's not just a utility token, it's a governance token giving holders a say in the protocol's future. Jupiter has achieved massive product-market fit with a critical use case. It's like owning the main toll booth on the busiest highway in the world. The user experience is another huge factor, making a complicated process simple and intuitive. This focus on the user will continue to attract waves of new people as crypto goes mainstream. Their tokenomics are designed for the long term, with a massive airdrop creating a decentralized community of holders. Jupiter is the central liquidity engine for the entire Solana ecosystem. As Solana aims to onboard 1 billion users, Jupiter will be the front door for trading and managing assets. For all these reasons, we are incredibly bullish on Jupiter. It's already a giant, but we believe it's just getting started. It's not a question of if it will be a dominant player in 2026, but how dominant it will be. This is easily one of our top picks. Our second pick is Marinade Finance, revolutionizing staking for Solana holders. Staking usually means your crypto is locked up and useless, but Marinade changes that. When you stake SOL with Marinade, you get MSOL, a liquid token that represents your staked SOL. MSOL automatically increases in value from staking rewards and is completely liquid. You can trade MSOL, use it as collateral, or provide it to liquidity pools. You're earning base staking rewards and can earn more in DeFi. Marinade is the king of liquid staking on Solana, with billions in total value locked. They've solved a fundamental problem for SOL holders. As more people buy and hold SOL, they'll want to stake it for yield. Marinade makes this process simple and secure. They spread your stake across top-performing validators, decentralizing the network and maximizing rewards. Marinade's governance token, MNDE, gives the community control over the protocol's future. As Marinade earns fees, that value can be directed back to MNDE holders. If Solana becomes a global settlement layer, Marinade would manage a significant percentage of the network's value. They're constantly innovating with new products and are a core pillar of the community. Marinade provides an essential service, increasing security, decentralization, and capital efficiency. It has a massive head start, billions in trust, and a clear path to growth. That's why Marinade Finance is our second pick to dominate in 2026. Our third pick is Orca, making DeFi accessible and fun. Orca is a foundational decentralized exchange, or AMM, that Jupiter pulls from. Orca's philosophy is built around user experience, creating the easiest to use DEX on Solana. For crypto to go mainstream, it can't be scary and complicated. Orca's interface is clean, colorful, and simple, making swapping tokens feel like a game. This is crucial for onboarding new users. Orca is a powerful and efficient AMM, reliable, secure, and highly liquid. They introduced whirlpools, concentrated liquidity pools, allowing providers to earn more fees. This innovation makes the market more efficient, benefiting traders and investors. Orca is mastering the human element of crypto. As new users flood into Solana, Orca is the perfect entry point. It's the DeFi for the rest of us platform, with a massive addressable market. Orca's liquidity pools are essential for Solana's DeFi ecosystem. Projects often choose Orca for their first liquidity pool due to its reputation and user base. Orca's governance token, Orca, allows holders to vote on pool rewards. As Orca's trading volume grows, so does the value captured by the protocol and its token holders. Orca is the user-friendly on-ramp to a new world of open finance. They have a strong social and environmental mission, donating fees to climate-focused charities. This builds a powerful brand and community. Orca's combination of innovative tech and user-friendliness is their secret weapon. As Solana grows, the need for simple, reliable liquidity venues will increase. Orca is perfectly positioned to capture a huge slice of that wave. They are building a community and a brand, and that's why they are our third pick to be a dominant force in 2026. Our fourth pick is Solend, building the central bank for Solana. Solend is the biggest money market protocol on the network. It's where you go to borrow or lend digital assets on Solana. A money market is a place to lend extra crypto for interest or borrow by putting up collateral. Solend has built the most successful version on Solana. If you're holding SOL and need cash, you can deposit SOL as collateral and borrow stablecoins. You get cash without selling SOL. If you have USDC, you can deposit it into Solend and earn interest. Solend acts as a decentralized bank, managing loans and interest automatically. Solend's dominance comes from its scale and network effects. More lenders mean better rates for borrowers, and more borrowers mean better rates for lenders. Borrowing and lending are essential financial activities. As more value flows into Solana, demand for these services will explode. Solend is the default choice for managing treasuries, earning yield, and accessing liquidity. Solend has been resilient, navigating market crashes and emerging stronger. The team is constantly expanding offerings, with isolated pools for riskier assets. Their token, SLND, is used for governance, giving holders a say in the protocol's future. As the protocol grows, there are pathways for value to accrue back to SLND token holders. The lending market is worth trillions, and DeFi is capturing that value. Solend is the clear leader on Solana, with the most liquidity and users. Any new DeFi strategy often involves Solend. It's the foundational money Lego that everything else is built on. In 2026, Solend will be a massive, dominant money market. It's the bedrock of Solana DeFi, and that's why it's our final pick. So there you have it. Jupiter, Marinade, Orca, and Solend. These are the four projects my team and I are betting on to be the titans of the Solana ecosystem by 2026. We've got the master aggregator, the liquid staking king, the user-friendly DEX, and the central bank of DeFi. Each one is a critical piece of the puzzle, with insane potential for growth as Solana rises. We put in the work, did the research, and these are our top picks. Remember, the crypto space moves fast, and while these projects lead now, always do your own research. This isn't financial advice, but a look into where we see smart money flowing. The future of finance is being built on Solana, and these projects are the architects. It's going to be a wild ride. But now I want to hear from you. Which altcoin do you think will dominate? Did we miss a project? Drop your pick in the comments and subscribe for more insights. Hit that subscribe button, and we'll see you in the next video. Just weeks ago, crypto was booming. Bitcoin at new highs, altcoins surging, optimism everywhere. Then, almost overnight, the market crashed. Portfolios turned red, and fear replaced euphoria. This wasn't a normal dip, it was a multi-billion-dollar liquidation that wiped out leveraged traders and sent panic through the community. Now the big question, is the bull run over, or is this just a reset before the next rally? Powerful forces are pulling the market in both directions. Negative news, and ETF outflows versus institutional interest and historical Q4 strength. Let's break down what happened, why, and what it means for your crypto strategy. The last month has been a brutal reality check for crypto investors. Bitcoin plunged from $114,500 to $91,000, a 20% drop in days, triggering forced selling. Ethereum followed, dropping from $4,020 to $3,050, erasing over $1,000 per coin. Even strong fundamentals couldn't protect projects from the panic. Altcoins like Cardano and Hedera were hit even harder, both down nearly 50% year-to-date. Billions vanished from the market as investors fled risk, especially in smaller coins. When Bitcoin sneezes, the rest of the market catches a cold, and this time, it was a full-blown crisis. The risk-off sentiment was clear. Safety first, risk last. Bitcoin, often called the king of cryptocurrencies, found itself under intense pressure as the market was rocked by a series of dramatic events. The crash wasn't just a random dip, it was triggered by two major catalysts that sent shockwaves through the entire crypto ecosystem. Record ETF outflows and the sudden movement of a massive Bitcoin stash linked to the infamous Mt. Gox exchange. The Mt. Gox saga, which has haunted the crypto world for years, resurfaced as news broke that the trustee overseeing the exchange's bankruptcy had moved a staggering amount of Bitcoin. This move immediately sparked fears that a huge sell-off could be imminent, putting additional downward pressure on prices. Meanwhile, institutional investors weren't sitting idle. BlackRock's IBIT, one of the largest Bitcoin ETFs, saw a jaw-dropping $1.26 billion pulled out in a single session. This massive outflow signaled that big money was taking profits, possibly bracing for further volatility, or simply locking in gains after a strong run. The movement of nearly $2 billion in Bitcoin from Mt. Gox wallets sent a chill through the market. Traders and investors alike worried that if these coins hit exchanges, it could trigger a cascade of selling, overwhelming buy orders and driving prices even lower. Yet, even amid the panic and uncertainty, there are reasons for optimism. Historically, the fourth quarter has been a period of strength for Bitcoin, with many past rallies kicking off during this time. Some traders are betting that history will repeat itself and that the current turmoil is just a temporary setback. Another positive sign is the high level of stablecoin reserves sitting on exchanges. This means that there's plenty of dry powder on the sidelines, capital that could quickly flow back into Bitcoin and other cryptocurrencies if sentiment shifts. Many savvy traders are watching closely, waiting for the perfect moment to buy the dip. They believe that once the panic subsides, a strong rebound could follow, rewarding those with patience and conviction. All eyes are now on the key support level at $89,000. If Bitcoin can hold above this crucial line, it could signal that the worst is over and set the stage for a recovery. However, if this support fails, the market could see further declines, shaking out even more weak hands and testing the resolve of long-term holders. Ultimately, this is a classic shakeout, a moment designed to scare out the weak hands before the next big move. For those who can weather the storm, the coming days could offer both risk and opportunity in equal measure. Ethereum's fall below $3,000 was a blow to market confidence and DeFi projects. Over-leveraged traders were wiped out, but the long-term case for ETH remains strong. Ethereum ETFs have attracted billions, showing deep institutional interest. The Pectra upgrade improved scalability and lowered fees, strengthening ETH's fundamentals. If the market recovers, Ethereum could rebound sharply, especially with ETF inflows and tech upgrades. But if $3,000 fails as support, lower levels could be tested. Cardano and Hedera have been crushed, both down nearly 50% this year. Even positive news, like ETF filings, couldn't stop the slide as the SEC's review was delayed by the government shutdown. Without ETF approvals, these coins are stuck in limbo, waiting for a catalyst. Their recovery depends on a broader market turnaround and regulatory clarity. For now, capital is fleeing altcoins for safer assets. ADA and HBAR are in a holding pattern, hoping for the storm to pass. The crash was a perfect storm. Institutional outflows, Mt. Gox's Bitcoin movements, and a major Cloudflare outage. BlackRock's ETF outflows shook confidence, while Mt. Gox's $2 billion Bitcoin transfer triggered panic selling. The Cloudflare outage took down exchanges and data providers, amplifying fear as traders lost access during the drop. FUD spread fast, and traders sold preemptively. The ongoing U.S. government shutdown delayed ETF reviews for altcoins, removing a key catalyst. With no positive narrative, sentiment turned negative fast. The market was left vulnerable, with no clear short-term driver for growth. Extreme fear often creates the best buying opportunities in crypto. When the market is gripped by panic and uncertainty, it's easy to lose sight of the bigger picture. But history shows that moments of widespread fear and capitulation have often marked the bottom of major cycles. The greatest investors know that when everyone else is running for the exits, it's time to start paying attention. Billions in stablecoins are sitting on the sidelines, ready to buy the dip. This massive pool of liquidity is like dry powder, waiting for the right moment to re-enter the market. It signals that investors haven't given up on crypto. They're simply waiting for the right opportunity to deploy their capital. Despite ETF outflows, 2025 saw over $18 billion flow into US Bitcoin and Ethereum ETFs. This influx of institutional money is a strong vote of confidence in the long-term potential of digital assets, even as short-term volatility shakes out weaker hands. Analysts believe this sell-off cleared excess leverage, setting up for a strong year-end rally. By removing speculative froth, the market is now healthier and more resilient, with a stronger foundation for sustainable growth. Corrections are normal in bull markets. They shake out weak hands and reset sentiment. These pullbacks are not a sign of weakness, but a necessary part of every healthy market cycle. They offer disciplined investors a chance to accumulate at lower prices, while others are paralyzed by fear. The Bitcoin halving supply shock is just starting to kick in, historically a major catalyst. Each halving reduces the new supply of Bitcoin entering the market, creating scarcity that has fueled previous bull runs. We're entering the window where reduced supply meets renewed demand. This rare alignment has historically led to explosive price action, as buyers compete for a shrinking pool of available coins. This could be the last big correction before the real post-halving rally. For those with patience and conviction, this moment may be remembered as a generational buying opportunity, one that rewards those who act when others are afraid. But there are real risks this time. The bull run may have been front-run by ETF hype, leaving few new catalysts. Bitcoin miners are under pressure, with hash price at a 5-year low and rising costs. If miners sell to cover expenses, it could add sustained selling pressure. Macroeconomic headwinds, like sticky inflation and high rates, limit new liquidity for crypto. The looming Mt. Gox distribution could flood the market with billions in Bitcoin, extending the correction. Even a fraction sold could overwhelm buyers and prolong the downturn. So, what's next for crypto over the next 6 months? After a period of intense volatility and rapid price swings, the market is now at a crossroads. Investors, traders, and even casual observers are all asking the same question: where do we go from here? The answer isn't simple, but by looking at key trends, upcoming events, and the broader economic landscape, we can start to piece together a roadmap for what's ahead. For Bitcoin, the next few months are likely to be defined by a period of consolidation, with prices expected to range between $90,000 and $100,000. This phase is crucial, as it allows the market to absorb recent gains and shake out weak hands. As ETF inflows gradually return, and the effects of the recent halving become more pronounced, we could see renewed momentum building for the world's largest cryptocurrency. Looking further ahead, the 6-month target for Bitcoin sits between $120,000 and $140,000. If institutional interest continues to grow, and macroeconomic conditions remain favorable, Bitcoin could break through previous all-time highs, setting new records and drawing even more attention from mainstream investors. Ethereum, meanwhile, is poised to outperform once the broader market begins to recover. The upcoming launch of Ethereum ETFs and the highly anticipated Pectra upgrade are set to be major catalysts. These developments could drive significant inflows and boost confidence in Ethereum's long-term potential, especially as the network continues to evolve and scale. After finding support and bottoming out near $3,000, ETH could stage a strong rally, with price targets in the $4,500 to $5,500 range. This would represent a significant recovery and could set the stage for further gains as adoption grows and new use cases emerge. For Cardano and Hedera, the outlook is more uncertain. Their performance will largely depend on whether ETF approvals come through and if the overall market sentiment turns positive. Both projects have strong communities and innovative technology, but they need a favorable regulatory environment and renewed investor interest to truly shine. If ETF approvals are granted, ADA could climb to 0.75-0.90, while HBAR might reach 0.25-0.35. These targets reflect the potential for significant upside, but also underscore the importance of external factors in driving price action for these altcoins. Without the tailwind of ETF approvals, however, both ADA and HBAR are likely to lag behind their peers. The message for investors is clear. Approach with cautious optimism, and be prepared for a bumpy ride as the market continues to evolve. This recent correction, while painful for many, has actually cleared out much of the excess speculation and created new opportunities for those willing to look beyond the short-term noise. It's a chance to reset, refocus, and position for the next phase of growth. The key drivers going forward remain the same: increasing institutional adoption, ongoing technological upgrades, and the lasting impact of the Bitcoin halving. These factors are laying the groundwork for a more mature and resilient crypto market. Volatility will always be part of the crypto landscape, but for those who can weather the ups and downs, the long-term outlook remains bright. Staying focused on fundamentals and maintaining a disciplined approach will be key to navigating the road ahead. Don't let short-term panic or market noise distract you from the bigger picture. The crypto revolution is still unfolding, and those who stay the course could be well rewarded in the years to come. Ready to uncover the altcoins that could explode by 2026. While Bitcoin grabs the spotlight, the real game changers are often found in the altcoin market. These projects are redefining what blockchain can do, and if you spot the right ones early, the upside is massive. This isn't about hype or quick flips, it's about finding the foundational tech of tomorrow. I'll break down 5 altcoins I'm watching, explain what makes them unique, and why they could be major players by 2026. Remember, this isn't financial advice. Crypto is risky, so do your own research. Let's dive in. First up, let's talk about the king of altcoins, Ethereum. It's the second largest cryptocurrency by market cap, and for good reason. Sure, it's not a hidden gem, but its story is far from over. In fact, Ethereum's journey is just entering a new chapter, with innovation and adoption accelerating at a pace we've never seen before. Ethereum pioneered smart contracts, which are self-executing agreements that run on the blockchain. This breakthrough unlocked entire new industries: DeFi, NFTs, DAOs, and countless decentralized applications that have changed how we think about finance, art, and governance. Its network effect is unmatched. Developers and users flock to Ethereum, reinforcing its dominance. Every new project, every new user, makes the ecosystem stronger and more valuable. For years, high fees and slow speeds were a problem, making Ethereum difficult to use for everyday transactions. But that's changing fast, thanks to a wave of upgrades and new technologies. The merge was a historic upgrade, shifting Ethereum from energy-hungry proof of work to eco-friendly proof of stake. This slashed energy use by over 99%, making Ethereum far more sustainable and attracting serious institutional interest. Layer 2 solutions like Arbitrum, Optimism, and Polygon now handle transactions off-chain, making Ethereum faster and cheaper. These scaling solutions are unlocking new possibilities for mainstream adoption. The Dencun upgrade and proto-danksharding are driving costs down even further, making microtransactions and new business models viable for the first time. Imagine using Ethereum apps as easily as any web app, but with all the benefits of decentralization, privacy, security, and true ownership of your assets. Institutions are taking notice. BlackRock, Fidelity, and other financial giants are launching Ethereum ETFs, making it easier for traditional investors to get exposure. Regulatory clarity is improving, and big money is flowing in. As governments and regulators provide clearer guidelines, confidence in Ethereum's future only grows. ETH's supply is also shrinking. EIP 1559 burns a portion of every transaction fee, making ETH potentially deflationary. This means that over time the supply of ETH could actually decrease, increasing its scarcity. So, you have rising demand, falling supply, and a maturing ecosystem. It's a powerful combination that's hard to ignore. Ethereum isn't just another altcoin, it's the backbone of Web3, powering everything from decentralized finance to digital identity and beyond. Its developer community is massive, with thousands of contributors worldwide. Each upgrade makes Ethereum more scalable, more secure, and more deeply integrated into global finance. While new chains compete for attention, Ethereum is expanding the entire pie, growing the crypto ecosystem for everyone. It's the settlement layer for the digital economy, where value moves seamlessly and securely across borders and industries. As the crypto space grows, so does the value of Ethereum's foundation. It's the infrastructure on which the next generation of the internet is being built. By 2026, I see Ethereum as a core holding for any serious crypto investor. Its resilience and adaptability make it a must-have in any diversified portfolio. Don't sleep on the king. Ethereum's leadership is hard-earned, and its momentum is only building. The next few years could see Ethereum cement its place as the most reliable and powerful platform in crypto, setting the standard for what's possible in blockchain technology. If you're building a portfolio for the future, ETH deserves a spot. It's not just an investment, it's a stake in the future of the internet. The story isn't over, it's just getting started. Ethereum's best days may still be ahead. Let's move to the next contender. Next, let's talk Cardano and its token, ADA. Cardano is the scientific blockchain. Every upgrade is peer-reviewed and rigorously tested before launch. Founded by Charles Hoskinson, a co-founder of Ethereum, Cardano's slow and steady approach is all about security and reliability. Critics called it a ghost chain, but since smart contracts launched, its ecosystem has quietly grown. Cardano's EUTXO model brings predictable transaction fees, no more surprise gas costs. Its roadmap is clear. After decentralization and smart contracts, the focus is now on scaling and governance. The Voltaire era will introduce on-chain voting and treasury management, making Cardano truly decentralized. Sidechains and scaling upgrades aim to put Cardano on par with Visa in transaction capacity. Real-world adoption is happening, especially in developing nations, like digital IDs for millions of students in Ethiopia. Cardano's methodical approach means fewer hacks and more trust, key for governments and institutions. By 2026, Cardano could be one of the most decentralized and resilient blockchains out there. Its focus on real-world utility and community-driven governance sets it apart. If you want a project playing the long game, Cardano is worth a close look. The market may soon reward its patience and rigor. ADA's price could reflect that shift. Let's see who's next in the race. 18. If Cardano is the tortoise, Solana is the hare, built for speed. Solana's proof-of-history innovation lets it process over 65,000 transactions per second for a fraction of a penny. That's faster than Visa, and it's made Solana the go-to for high-frequency apps, trading, gaming, and social media. Yes, Solana had outages and early centralization concerns, but the team is fixing these with upgrades like Firedancer, a new validator client for more resilience and decentralization. As hardware gets cheaper and software matures, Solana's network is stabilizing. Its ecosystem is booming. Deep-in projects like Helium and HiveMapper, plus a thriving NFT and meme coin scene, are driving massive user growth. Solana Pay is even challenging legacy payment rails with instant, near-zero-fee crypto payments. Institutions are watching closely. Solana's relentless focus on performance has carved out a unique niche. By 2026, it could be the backbone for a new generation of high-speed, decentralized apps. SOL's value could soar as the network matures and adoption grows. If you want exposure to the fastest blockchain, Solana is a top contender. Let's keep moving. Imagine a future where blockchains don't compete, but collaborate, where hundreds of networks work together seamlessly. What if the next evolution of the internet isn't about a single blockchain dominating, but about many, each with its own strengths, all interconnected? That's the bold vision behind Polkadot. Polkadot, powered by its DOT token, is often called a blockchain of blockchains. It's designed to connect specialized blockchains, called parachains, so they can interoperate securely, share information, and transfer assets without friction. Think of it like the European Union for blockchains. Each parachain is sovereign, able to set its own rules and innovate independently, but they all benefit from shared security and communication through the Polkadot relay chain. This structure encourages diversity and experimentation, while maintaining a strong, unified foundation. This approach solves the fragmentation problem that plagues many blockchains today. Moving assets or data between chains becomes seamless, trustless, and efficient. No more isolated silos or complicated bridges. Projects compete for parachain slots through innovative auctions, locking up DOT tokens and rallying their communities for support. Winning a slot means access to Polkadot's shared security and network effects. This pooled security model allows new projects to focus on building great products, rather than spending years and resources bootstrapping their own blockchains from scratch. It's a launchpad for innovation. With Polkadot 2.0, the system is set to become even more flexible. Projects will be able to buy block space as needed, scaling up or down based on demand, making the network more dynamic and accessible. The Polkadot ecosystem is already thriving and diverse. Moonbeam brings Ethereum compatibility, Astar enables multi-chain dApps, Acala powers DeFi, and dozens more projects are building unique solutions on Polkadot. DOT isn't just a token, it's the lifeblood